and welcome to ET Now Startup Central, India's first and only daily show dedicated to startups and entrepreneurship. I'm Chandra Srikanth, coming to you live from India's startup capital, Bangalore.
And I'm Krishna Kumar, coming to you live from ET Now's Mumbai studios. First up, a check on all that's making headlines here at ET Now Startup Central. Funding has indeed dried down for the year 2016, especially in the first half. For startups, we have Arun, Natarajan and Ashish Fafadia joining us on the show to give a 360-degree perspective of all the funding action in the week gone by. Former Myntra and Flipkart executives Mukesh Bansal and Ankit Nagori floated a venture together a while back, and they do join us on the show today for more details of what they do and what funding they've received. And Shailesh Rao has stepped down as the Vice President of Asia Pacific, Latin America and Emerging Markets at Twitter. Rao did serve as the Vice President of International Revenues at Twitter.
Thanks for that, Krishna. And as you said, it's been largely anecdotal. There's been a perception that funding is drying up. But today, I guess we have all the data there is between January and June 2016. This is a study that we've done with Venture Intelligence. And it certainly shows, that the pace has slowed down significantly compared to the same period last year. In fact, to give us more perspective on this, we have two live guests joining us on the show today. Arun Natarajan from Venture Intelligence from Chennai, as well as Blume Ventures CFO Ashish Fafadia will tell you in a little while why he's on our panel today. But Arun, I want to take it to you first. Take us through the broad trends, Jan to June 2016. Has it been as bad as everyone anticipated? What is your takeaway when you look at the data?
Sure. The first 6 months of 2016, we have seen as many as 197 investments by VCs, worth about $623 million. Now, if we were to place this in context, we can look at it in two ways. We can compare it to 2015, the same period, when hedge funds and all kinds of other international investors were playing in Indian startup land, or we can rewind back just 1 year before that. So if we compare to 2015 H1, which is the first half, we are actually down 18% in terms of number of investments, and as much as 35% down in terms of the value of the investments. Now, if you just rewind back 1 year, just go back to 2014, where we were actually seeing just 160 odd transactions, and now we are at the kissing the 200 level. So we are actually up 24% when compared to 2014 even. And if you take this first half, remove 2015 out, that was the extraordinary year, we're actually at the all-time high levels in terms of volume of investments. So it depends on how you look at the picture with 2015 or without 2015. And just look at some of the sectors that have attracted investments. We have the poster child of 2015 first half was e-commerce, and today it is everybody's favorite beating boy. But if you look at some of the investments that have happened, the bigger ones, we have somebody like Woonik, the fashion retailer, raising as much as $20 million. We have a B2B e-commerce player like Power to SME attracting similar kind of capital from somebody like Nandan Nilekani, led by him. And we have a healthcare e-commerce player, which is 1MG, attracting around of as much as $15 million, led by a hedge fund, Maverick Capital. So we are, I would say, in an area minus 2015, quite good levels, and it's not doom and gloom at all, but for 2015.
Right. Arun, let me take it to the other guest from Mumbai, Ashish Fafadia from Blume. Ashish, you heard out, the broad trends, and looks like you've ended at the top of the league tables with the maximum number of investments between Jan and June 2016. So, why was Blume out there in the market when everybody else was pulling back, or, was it value picking because prices really came down? Take us through the broad, trends, why you were so active in the last 6 months.
Sure. Thanks. So an important yardstick for us will be how we delivered on those numbers rather than just being on the top of the charts in terms of the number of investments. That having said, I think we were in the point where our second fundraise was coming through. And broadly for us, 2014 through 15, early first half or roughly about the first quarter were largely dry. And we had been working on select pipeline and anchoring founders to work with us as we went down through creating a second fund, first close. And what saw us in through that process was that dry period, and post which are going into some of these companies that we had budgeted and kept on hold. So it was not about only value picking. We have believed very strongly that we should be working very, very deeply into working on select companies in the first 3 years. First checks should typically come earlier on so that you have given the companies maximum possible time to go and expand their reach outs to the market without pressing aggressively for exits. So it's not only about value picking. We have just not kept any filters. Whenever we have found that there have been great teams and thesis driven principles on investing, we have gone and made commits on the basis of the mandate on which we've raised the fund.
Ashish, this is Krishna Kumar coming to you from ET Now's Mumbai studios. I want to understand, in a market like this, if you have come out as the top investor, I just wanted to understand, will this encourage your peers to follow suit? Because at the end of the day, the funding action in the first half of 2016 is lower than both halves of 2015. This is the lowest we've seen in recent times. Do you see the tide turning in the second half of 2016?
So when you look at the statistics, 18% fall in the number of investments, or a jump of about 24%. These should not be looked upon as movers and shakers. Another important point I want to make sure I table down in this discussion is we are early stage investors, we do seed checks. So in terms of the quantum, these does not reflect very heavily on the system. And the whole effort of going ahead at this point in time is a reflection of the fact that there have been great founders at work. There have been great ideas that we are seeing. And it is also balancing in some sense where a lot of the platform ideas backed by the last year's consumer-driven plays are seeing the light of the day. And also enterprise plans, which was largely missing in the last boom. So in terms of that combination, when there is a great plan, we don't want to hold up and we'll go ahead and invest. Of course, we'll have a certain yardstick and risk management framework which we strongly work on, and that also be something similar for most of the funds. So there have been some of our peers have been in the fundraise process. As you see them getting their set of first closes to final close journeys, you will see them in the space also. Important also is the fact that not every investment gets announced, or there is also a function of timing of the investments getting announced. Some of the numbers that you are seeing in this list are also investments that were carried out last year and just got announced in this year.
Okay. I'm just going to take this to Mr. Arun Natarajan in Chennai of Venture Intelligence. Arun, this is Krishna from ET Now's Mumbai studios. We just heard what Mr. Fafadia had to say, but I wanted to understand from you, 2016, the first half has seen some of the lowest amounts, total value of funding in recent times. We've been talking about it week after week about the funding tap drying up. But you have Mr. Fafadia telling us that, as long as the business plan is fine, as long as the team is fine, you do have people like Blume Ventures going out and taking their bets. Do you see the tide turning in the second half of 2016, or is this to be viewed as sanity finally coming back to venture investing as far as the Indian startup ecosystem is concerned?
Absolutely, Krishna. The point is more on, whether, as I said, compared to 2015, whether that is an anomaly. I think, if you look at the mix of investors, whether it is seed, investors like Blume Ventures, or whether it is family offices like those of, Mr. Tata and Mr. Mohandas Pai, they are only stepping up their pace of investments. And even if, some of the Silicon Valley investors are kind of not so venturesome, we are seeing people from Japan, South and other parts of Southeast Asia coming into India for making their first set of investments. So I agree with Ashish that the second half looks better, but the question I will say, are we talking about comparing to 2015? I suspect we may not exceed those levels, but we are still doing very well in terms of numbers compared to prior years.
Right. Just a final question from my end, Ashish. Some of these startups that you have funded, most of it I know has come up at the seed level. What happens, when they come up for Series A, Series B a few months down the line? Because those are the rounds which have completely sort of taken a beating. And I just also want to ask Arun, before we wrap up the discussion, if you have any questions for Ashish as well on this front.
So indeed, so as just to add on before
Sure.
Ashish
So
answers,
while I wait
what
for
is it
Arun's
that is
question, I'll
bothering
answer
the-
what you just asked. Sorry,
Right,
go ahead,
Ashish,
Arun,
we'll just
please
take
go
Arun's
ahead.
question as well.
Yeah. So my question is,
Yes.
what is bothering these Series A guys? Why are they kind of, while clearly the seed investors are stepping up, the kind of dip we are seeing Series A is quite reflected in the numbers. What is bothering those guys? Why are they holding back?
In our first fund as well, there has been, and we used to internally in the fund call this something of on the lines of a Series A, Series B choke, where at those levels, post the seed bets, there have been a lot of scrutiny around going deeper. And typically when there is a fund which has got a certain quantum of India allocation, or it is a certain quantum of fund in India itself, they are much more picky and choosy about the plans. The momentum at the seed level only means that there are greater choices. Historically, Series A has always been not very easy to get for most of the companies. That having said, one important data point is that in some of the companies that you have numbered on as a part of your analysis, a few that we have done are directly at the time of Series A coming in straight along with the Series A investor, given the fundraise was a larger fund. So it is something which historically has been tough to get, and that filtration always has been there, and it will continue as I see it. And when you have more and more companies getting funded at an early stage with angel investors, with family offices getting into the space, in terms of the proportion and the percentage hike, until new funds come in or the Series A funds raise sector specific or strategy specific deeper fund allocation at that level, you always find that sense of choke at that level.
All right. Ashish Fafadia of Blume Ventures and Arun Natarajan of Venture Intelligence. Thank you, both of you gentlemen, for taking time out to be with us here on ET Now Startup Central. Moving on to the other big story that we're tracking over here, former Myntra and Flipkart executives Mukesh Bansal and Ankit Nagori have floated a venture together a while back, and they are joining us here on the show for more details of what exactly they're up to, and more importantly, what kind of funding they've received. Ankit, Mukesh, thank you so much for taking time out. I'm going to start with you, Ankit. The last time we spoke, you hadn't zeroed in on a name as yet. Tell us about your new venture and what exactly is it set to do?
So yeah, like last time we spoke, we didn't have a name, we didn't have a team, but now we have a name and a small team to start with. So we're calling our venture CureFit. So CureFit is a platform for creating a preventive healthcare solution for the Indian audience. And we really believe that in India, preventive healthcare is not completely ignored, which makes a much higher curative healthcare cost for all India. So I think if we are able to give a good solution around preventive healthcare using a lot of technology and data, it will do a massive amount of good for the Indian audience. We have a small team in place now. We have a few engineers, a few analysts, and we are very aggressively hiring for our product and technology team, because we feel that this solution will be disrupted through technology. Overall, if you look at the tech intervention in healthcare overall in the country, it's very poor. Not even in India, but if you look at any solutions abroad, they are mostly built years ago. There's been very little innovation in healthcare area in technology and other data-driven approaches. So I think overall, if you look at the opportunity, it's huge. You can create a huge amount of disruption through technology, data, and just a much more long-term thinking around health.
Mukesh, you're no stranger to starting up, so tell us, what learnings are you going to bring from your previous ventures, notably Myntra, into CureFit?
Yeah, I'm very excited about being an entrepreneur all over again. I think it's quite exciting to start from the day one. There are a lot of learnings and experience from previous stint at Myntra and Flipkart. I think the biggest thing is we'll build this business with a very strong foundation and focus on the long term. Ankit and I have a 10-year vision for this organization. So we'll take it in 1 year at a time and doing the right things. So for example, first 12 to 18 months, two big focus area for us is one is building an absolutely world-class team, very high caliber team, younger guys who are very enthusiastic, passionate, who want to create an impact in India, understand technology very deeply. Second goal would be to really build out a stellar product. So by the time we launch next year, we want consumers to really love the product. We'll focus on scale only when we believe the product is really in a position where it's able to deliver a meaningful impact for the consumers. And lots of small learnings as well in about building the right culture, right environment, the kind of people we want to hire. I'm sure there will be a lot of new things as well. Every time I think it's some things we probably will encounter for the first time in this journey.
All right, Mukesh, let's take this back to Ankit. Ankit, tell us what exactly is your moat, considering there are numerous fitness and health apps in the market and you're not the only one.
Right, so great question, right? So if you look at the entire solution around fitness and healthcare, it's a very vertical driven solution right now. Most people are either focusing on fitness or active sports or diagnostics or telemedicine. There is no one single solution which covers all the 4 or 5 areas, which are very important from a human preventive healthcare point of view, right? Curative in India is mostly, through primary healthcare and secondary and tertiary healthcare, right? So people go to these providers only when they have fallen ill or they really feel that they need some checkup or some diagnosis to be done. But very few people currently go to these providers for a preventive health checkup or when they think they need to do this test to prevent any disease, right? So that's not happening. So I think there's an opportunity to create a plan or a business model around helping people know their mind and body better, how they can preempt anything happening to their body through just a much better active lifestyle, through much better control on mind and body, through mental health and knowing your body through diagnostics, etc. So the moat is just the entire package around how a person can stay healthy through nutrition, regular checkups, workout, mental health, etc. So it's the first solution which will cover all the 4-5 key verticals.
Back to Ankit for all the funding details. You're launching this at a time when there's been so much of negative news flow, valuation markdowns, layoffs. It's just a bad time to, be starting up. What is your own take on the news flow that you've seen in the last few months, considering valuation markdowns of Flipkart or what Myntra's been doing, what Snapdeal's been doing? What's your own take on the news flow?
I think it's at some level affected by what's happening globally. I think the stock markets are jittery globally, as well as the USA tech scene is a bit muted. So that is casting a shadow over India. But the way I look at it, this is just part of normal business cycles. We had 2 really great years in 2014 and 15. This may be a year of a little bit stepping back and introspection, where good companies will get separate from the bad companies, and then things will pick up again. I think 2017-18 may end up with again being a boom year. So I think it's this inevitable. We're not going to see 5-6 years of absolute hype. Few good years followed by a year of correction is overall healthy. I don't think it's all doom and gloom. Good times will come back. I see more and more entrepreneurs trying innovative stuff in India, and I'm very bullish that next set of companies that we'll see emerge in India will be even more audacious and innovative than what we've seen in the past.
Ankit, we're saving the best for last, so take us through, the amount you've raised, the investors, and I guess the investors are pretty similar to what Flipkart and Myntra had.
Right, so me and Mukesh, like I mentioned the last time, had self-funded some of it, and now we have got 3 additional investors on board, which are Kalari, IDG and Axel. Me and Mukesh have worked with them in the past at Myntra and Flipkart, and we all have a great relationship. I think it will be a great opportunity to work together and again recreate some of the success of the previous companies. The next 12 months is completely about building the product and the team. We want to build a stellar technology and data team for us, so that we can build the best solution possible. We'll go live only when we think we have a great product and a great product market fit, and we'll be doing a lot of iterations and experiments over the next 12 months. So you can expect a launch sometime in Q1 of 2017. Until then, it will be about building the product, the team, and doing a ton of experiments and learning from them.
All right, Ankit, I'm afraid we might have to let it go at that. Ankit Nagori, Mukesh Bansal, thank you so much for taking time out to be with us here on ET Now Startup Central to elaborate on your brand new venture, CureFit. Chandra, on that note, it's time for the other big story that we're tracking over here. Shailesh Rao has stepped down as the Vice President of Asia Pacific, Latin America and Emerging Markets at Twitter. Rao served as a Vice President of International Revenue at Twitter as well. Prior to joining Twitter, Rao was associated with Alphabet Inc. as the Director of Local Search. He served as Managing Director of Media and Platforms at Google India from March 2007 to February 2012. He also served as the Managing Director of Sales and Operations at Google India and managed Google's domestic business and strategic partnerships here in India.
Krishna, Nikesh Arora, Shailesh Rao, of course, for completely different reasons, but it will be interesting to see what Shailesh's move will be next. But with that, we come to the end of this edition of ET Now Startup Central. We certainly hope you enjoyed the show. Thanks so much for watching, and keep it with ET Now.
Absolutely, Chandra. Just one last thing, and the season of exits continues. May I add, it's one more here on the show. Keep watching ET Now. Don't go anywhere.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.